Marketing Specialist for Revolution Group. I'll be your host today for our discussion. I have a few housekeeping items to go over. We will be recording this session to post on our website, so if you would like to share today's information or revisit it, you will be able to do so. Also, we will be having Q&A at the end of the session today. Feel free to submit questions through the presentation. Just type them into your control panel on your screen. We will do our best to answer all of the questions at the end. I'm pleased to welcome Ryan Hecht with BDO USA and Mandy Lindemood as they discuss modern ERP's impact on auditing. For those of you who don't know us, Revolution Group is a Central Ohio-based technology solutions provider founded in 1995. Our partnerships with Plex, Salesforce, and Microsoft allow us the expertise and resources necessary to facilitate our customers' growth. We have been extremely successful in helping our customers leverage technology to revolutionize their supply chains and improve their businesses. Ryan Hecht serves as a Senior Director at BDO USA. In his role, he works with public and privately owned businesses, providing counsel and assistance with external audits, reviews, and financial statements, focusing on all aspects of their financial and strategic business needs. He's a certified public accountant and chartered global management accountant with a strong focus on the manufacturing and distribution industry. On our staff, we are privileged to have ERP consultants, custom developers, and ERP analysts with years of manufacturing and supply chain experience. Mandy Lindemood is one of those people. She's a senior ERP consultant with Revolution Group and has years of leadership experience in business process improvement, ERP selection, and system deployment and optimization. She serves as a financial subject matter expert for our team of consultants and works with manufacturers across the country to maximize the financial return on their ERP investments. It is now my pleasure to introduce Ryan Hecht.
Thank you, Ruthie. I'm very happy to be on the call today. Just a brief background of who I am, just to give you a baseline for what I'm going to cover. But I've spent the last 14 years in the accounting space. 11 of those years have been in public accounting. 2 of those years have been in corporate accounting. So I've seen the impacts of ERP systems on both the audit side and then even within the corporate accounting side, and then how the ERP from the corporate accounting side can be leveraged from the audit perspective. Currently, I am with BDO, which is the 5th largest public accounting firm in the world. And taking all of that experience, today what I'm hoping to share with you is some basics about what a financial statement audit is. So I'll be covering the definition of an audit, the purpose of a financial statement audit, and then I'm going to go into some specifics about benefits of an ERP system to a financial statement audit. So with that in mind, the first section, so what is an audit? In general, an audit consists of evaluation of a subject matter with a view to express an opinion on whether the subject matter is fairly presented. Companies prepare their financial statements in accordance with a framework of generally accepted accounting principles. In short, that's GAAP, G-A-A-P. That's relevant to their country. So most likely everybody on this call will be leveraging US GAAP. The fair presentation of those financial statements is evaluated by independent auditors using a framework of generally accepted auditing standards. So in this case, it's not GAAP, it's GAAS, G-A-A-S, and typically we're performing that under United States generally accepted auditing standards. And these GAAS standards set out requirements and guidance on how to conduct an audit. Broadly speaking, the audit process can be summarized in 5 phases. That's planning, risk assessment, audit strategy and plan, gathering evidence, and finalization. For the purpose of this presentation, when you look at an ERP system, the benefits are really found on the gathering evidence side from an audit perspective. Within that, the gathering evidence side, the auditors are utilizing a combination of testing the company's internal controls, tracing the amounts and disclosures included in the financial statements to the company's supporting books and records, and they're also obtaining external third-party documentation. So that's what an audit is. So what is the purpose of a financial statement audit? Companies produce financial statements that provide information about their financial position and performance, and this information is used by a wide range of stakeholders in making economic decisions. Typically, those that own a company, the shareholders, are not those that manage it. Therefore, the owners of these companies, as well as other stakeholders, which could be banks, suppliers, or customers, they take comfort from independent assurance that the financial statements fairly present the company's financial position and performance. For public companies, an external audit is required by law. For private companies, other stakeholders such as banks may have a requirement for an external audit. And lastly, if funds are received from federal sources, the company may have a requirement for an external audit. So now that we've created a baseline of what an audit is and the purpose of an audit, what I wanted to jump into was some benefits of an ERP system to a financial statement audit. And I've really broken this down into, I think, 4 subsections. The first is the benefits on financial statement close process efficiencies. The second on real-time visibility. The third on internal controls. And then lastly on inventory management. So to start off with, the financial statement close process. Some of the benefits are directly related to having less manual entry and duplication, and also it can shorten the close process. So specifically for less manual entry and duplication, an ERP system allows the inventory management, customer, and vendor modules to be integrated, and as these modules now interface, generating transactions into the general ledger system occurs as data is entered into each module. So no longer will manual journal entries need to be recorded to capture data from separate process modules. Through the automated system integration, less manual entry is needed, and this decreases the risk of manual entry error. So that's an area within the audit that we're concerned about is manual entry error. Plus, through the same automation, duplication is eliminated. So more automation and less manual entry allows the audit to more efficiently test transactions, and that leads to less support that is required to be provided. Related to shortening the close process, as systems and modules are integrated into the general ledger system and the financial reporting system, the month-end financial statement close process can drastically be shortened as manual entry and duplication are limited. Similarly, the necessity to manually transfer data from the general ledger to the financial reporting structure is eliminated as they are integrated. An efficient close process utilizing an ERP system can pare down the close process to 3.5 days on average. So a shortened close process allows an audit to start earlier and/or allows management more time to prepare for the audit. The second section I wanted to cover is real-time visibility. And Ruthie, if you could go to the next, actually here it is. So real-time visibility. When you look at what an ERP system can do with this, one area it can really help is drilling down to supportable transactions, and the second is related to exception reports. So due to the ERP system integrating modules that capture detailed transaction data, it affords the ability to drill down from a high level, either from the financial reporting system or from the general ledger. So now you will have the ability to select a financial statement level account, drill down into the individual accounts that make up that subgroup, and then even drill down into the individual transactions that make up that account. And then support can also be attached to each transaction. For audit purposes, the data is easily provided to auditors to make selections, and the support for each transaction is readily available. So a big advantage on the ERP side is the ability to drill down to supportable transactions. Exception reports. So with the ability for real-time visibility, more timely and automated detection controls can now be utilized as well. An ERP system allows the creation of exception reports that can timely detect issues. For audit purposes, additional controls lower the risk of audit, or lower the audit risk, and exception reports can be audited, leading to less detailed testing over that area, So specifically, the impact to you would be less work that you have to prepare for the audit. The third section is related to internal controls. So the ERP system can drastically impact your internal control structure. The three areas that I'm going to cover are automated versus manual controls, prevent versus detect controls, and then lastly, some segregation of duties considerations. So automated versus manual. An ERP system allows for the usage of more automated controls versus manual. An automated control is typically better than a manual control, as a manual control is dependent on an individual completing that control. So for example, automated controls can be utilized to require each transaction having appropriate support attached to the transaction. So you can't even move forward in that transaction unless that support's there since it's automated. Whereas if it's a manual control that was used that requires an individual to maintain hard copy support, it would be possible for that individual to forget or not maintain that hard copy support. On a prevent versus detect, when you're really looking at controls from this perspective, a detect control is something that is a control that captures an error after the fact. So it's a very important control still, but the error has already occurred when it's detected. On the prevent control, these are controls that do not even allow you to create an error. An ERP system allows for the use of more prevent controls. The system could be set up to ensure the three-way match is completed prior to revenue being recognized. By implementing such a control, it prevents revenue from being recognized inappropriately. Prevent controls are powerful as they do not allow an error to occur in the first place versus detect controls that are designed to detect errors after they have occurred. And then lastly, from internal controls, segregation of duties such as limiting access to modules and accounts. So an ERP system does allow for the use of stronger segregation of duties controls. An employee can be restricted to only use certain modules or to be even restricted to only be able to record entries to certain accounts. The system also allows transactions from the beginning to the end to be tracked by who entered each piece of data or each step that creates an audit trail. And this is a very important part of the audit when we're looking at segregation of duties. The more segregation of duties, the less audit risk that we have. So we love that part of an ERP system. And then lastly is inventory management, which is a big impact to manufacturing companies. Within inventory management for the benefits of an ERP system, the first item I'm drawing attention to is the integrated stock status that can now be drilled down and supported. Through integration of the general ledger with the stock status, inventory can be viewed at a detailed level from even the financial statement level, as the details can be drilled down into all the way down to the invoice level. So not only is it a big benefit on the corporate side, but even on the audit side, it's easier for the auditors to make selections at a high level and then drill down right into the support that exists. Another benefit is the standard costing system, having better visibility and the ability to drill down into variances. An ERP system allows the user to drill down even from the financial statement level into standard cost variances. An ERP system also may be structured to create break-even analysis by product or even at the machine or line level. An ERP system also allows for easier application of direct and indirect rates. A third benefit to inventory management is the visibility into gross margin by product and location that can be utilized for analytical analysis by the audit team. Oftentimes the auditors will be looking at gross margin. It's a good test on the revenue and cost of goods sold side. And we may be looking at it from a product level. So do some products look like their gross margin is significantly larger or less than other products? And we may be doing a period over period comparison as well. And an ERP system really helps drill down into those details to support at an analytical level what's going on within gross margin. And then lastly, the inventory aging can also be drilled down into and utilized for audit support as evaluation of inventory, which is typically a very sensitive area within the audit. So it does provide even more details as well with that. So with that, I'm actually going to turn it over to Mandy now. She's going to cover some more details surrounding this.
Thank you, Ryan. My experience and background is on dealing with the clients and actually setting up the ERP system. So I wanted to speak to some of their comments on the benefits that they've experienced through their audit experiences, and some of the highlights that they've spoken to me, and some of the areas that we focus on when we're setting up a new ERP system with a client. The audit benefits of a modern ERP system, specifically around the finance and resource management, of course, is your basics balance sheet, your trial balance, your general ledgers, being able to do gross profit analysis, cost center analysis, asset and depreciation management, tax management, and then of course ABC analysis for your inventory. And there's many more areas that an ERP system can help support the audit. These systems inside of an ERP are all integrated together to be able to provide these statements and be able, as Ryan said, to drill all the way down to the supporting detail. And as we all know and have been through audits, the supporting detail is what your auditors are looking for. So some special audit considerations specifically for manufacturers is it's nearly identical to any other business except for all these additional procedures that they need to do around inventory. And that's kind of where I'm going to focus. Inventory in manufacturers is your largest asset that's sitting on your balance sheet. And so the financial audit for manufacturer, that tends to be a very big area to make sure that you can support the balances you're putting on your balance sheet. And auditors, of course, are required to obtain reasonable assurance that asset that's on your balance sheet is accurate as possible and is free from any kind of material misstatement. Again, whether it's caused by error or fraud, the intricate details of the supporting statements is what is going to give them that assurance. They design specific procedures to test for inventory balances. We're going to go through how we can help with some of those procedures. A lot of them are physical inventory. Many auditors will come in and want to observe or validate the physical inventory. An ERP system will contain inventory locations for all of your inventory. They'll be able to do a selection from your item master or your inventory valuation, and you'll be able to go directly into the ERP system and tell them where those assets are located on your manufacturing floor for validation of your counts. ERP systems also offer ABC inventory, where you can schedule cycle counts, and they can be systematically demanded based upon how you decide your inventory needs to be valued as far as ABCs. So A inventory may get cycle counted quarterly, where B inventory may get cycle counted every 6 months, and C inventory maybe only the annual physical. These are things that you and your auditors can work together to make sure that your controls are in place, and over time you can eventually minimize or eliminate the annual physical inventory with the correct controls and the ERP system working together. Another very large area that is focused on it in inventory is the raw material price testing. Auditors will come in and need documentation and selection to validate the cost of your raw materials. These can be done by invoices, receipt records. These can easily be attached in the ERP system. Several ERP systems will automatically do your received but not invoiced accrual. All of the ERP details are all behind the scenes and traceable through a click of a button and links throughout the modules. I have several clients that when they do get the physical inventory, or the physical invoice, they actually attach these invoices to the transaction in the ERP system. So when the auditor comes in and makes a request of invoices to vouch, they are able just to point them to the little link, and they can click up and see the PDF image of the supplier's invoice that they received. Receipt records are readily available in the system through modules communicating. The inventory module has a majority of ERP systems has the ability to record the receipt and send the transaction over to the general ledger. Manufactured inventory costing is also, once raw materials have been valued, the next step is to look at how you're valuing your WIP and finished goods. Modern ERP systems contain all the mappings for your engineering bombs and routing, and they also contain the jobs that are kicked off from those to produce the manufactured items. Employee records are then attached to these jobs as production is recorded throughout the system. Consumption records are recorded to show which raw materials, which lots, which serial numbers have been recorded and consumed through this production process. Many ERP systems can have a comparison to actual costs, so you can provide the auditor with a comparison and justification of your standards, side-by-side viewing of what actual costs would be for the manufactured product compared to what standard is rolling up to. Production records are all then tied to your finished goods and can be traced all the way through the process from shipment all the way back. And again, as Ryan stated, variance records are throughout the ERP system, tracking the difference between what actual production was to what standard cost is to support any justification for journal entries or revaluation that was needed throughout the year. And finally, control testing is a huge audit focus in inventory. Inventory is an easily manipulated item. Control testing is their full traceability of product life cycles from raw material receipt to finished good can be provided. User IDs are attached to all records inside of an ERP system, so all transactions and all records that occur will have a user attached to it. Again, these permissions can be viewed so that you can justify to the auditors whom has permission to do such transactions, and that user ID is never in a transaction record that they don't have permissions.
Thank you, both Mandy and Ryan. That was great information. We appreciate you taking time out of your day to be on our call. We're going to have a Q&A if there's any questions. I don't have any right now. We'll wait just a few seconds here to see if anybody submits any questions for us for the webinar. Doesn't look like we have anything coming in, so I'll wrap things up. Thank you again for being on the call today and for everyone who did dial in to listen. We will have this webinar up on our website later this afternoon, so if you would like to share it with anyone else or reference the material, please feel free to do that. And thank you all again for attending, and everybody have a great day.